Hi everyone. So today we are going to cover another tax planning instrument available in Canadian economy, which is called Registered Retirement Savings Plan, commonly known as RRSP. So this is all about RRSP, which we are going to cover in today's session and would be sufficient from an investor's perspective. So we are going to cover basic idea of RRSP. Thereafter, we'll also talk about what are the different types of RRSPs, what are the different types of qualified and non-qualified investments in RRSP, contribution and over contribution guidelines for RRSP, earned income eligible for RRSP, then what is the procedure, what are the guidelines for doing contribution in kind in RRSP, what are the guidelines for withdrawal from RRSP. We'll also talk about very important tax planning aspect of RRSP, which is called spousal RRSP, and withdrawal guidelines from spousal RRSP. Thereafter, we'll talk about what are the other types of RRSP contribution options available to investors, and what are the circumstances under which RRSP can be terminated. And lastly, we'll talk about advantages and disadvantages of RRSP. So RRSP is a type of financial instrument which allows people to defer payment of taxes on part of their income and put it toward their retirement saving. That is why RRSP is called as tax planning cum retirement planning instrument. Both annual contributions up to allowable limits and income earned in RRSP remain tax-free as long as it remains with RRSP. Withdrawal from RRSP, if any, is being treated as regular income and thus taxed in the year of withdrawal. These are the major two types of RRSPs. First one is called single vendor plan. Another category of RRSP is called self-directed plans. So single vendor plan, here investments are held in trust under the plan by a particular issuer, say bank, insurance company, mutual fund dealer, credit union, or trust company. The holder of RRSP do not make day-to-day investment decisions. They may pay a trustee fee for this type of plan in addition to any cost incurred for purchasing the investments themselves. Second type of RRSP is called self-directed plans. Here in this case, the holders invest funds or contribute certain acceptable assets in kind like security directly from the plan. Thus the holders themselves make many of the investment decisions. These plans are usually administered for a fee by a Canadian financial services company. So let us talk about what are the qualified investments in RRSP. Following are the investment products are among the most popular among a list of qualified RRSP investments. For example, money deposited with a bank or a similar institution could be in the form of cash. Second type of popular qualified investment in RRSP is GICs, government guarantee bonds, shares and debts, obligations of Canadian public companies, shares of foreign public corporations listed on a prescribed stock exchange, foreign government bond with investment grade rating. There are certain non-qualified investments in RRSP as well. So following are the certain items which do not qualify for investment in an RRSP. Shares and debt obligations of private corporation unless certain prescribed conditions are met. Real estate other than REIT. Full form of REIT is Real Estate Investment Trust Units, which are qualified investments. So real estate is non-qualified, however REIT is qualified investment for RRSP. Please remember, commodity and financial future contracts are non-qualified for RRSP. Property such as artwork, jewelry, rare manuscripts and stamps are again non-qualified investments for RRSP. It is also important to understand that there is no limit on number of RRSPs one can open and own. However, the annual amount that can be invested in all RRSPs is lower of the following two amounts. Number one, it cannot be more than 18% of previous year's annual income, or the RRSP dollar limit for the taxable year set by the CRA. The RRSP limit is indexed to inflation each year. It is CAD 292110 for 2022 year, up from CAD 27830 in 2021 year. Further, from lower of the above two amounts, the following additional calculations are required to be done to arrive at the maximum amount that can be contributed in a current year in an RRSP. So out of lower of these two amounts, we need to deduct previous year's pension adjustment and current year's past service pension adjustment PSPA, and thereafter we have to add taxpayers unused RRSP contribution room at the end of immediately preceding taxation year if it is available. Please note that the calculations must be made in the taxation year or within 60 days after the end of the year to be deductible in that year. However, unused RRSP amount is allowed to be carried forward indefinitely. Let us try to understand the concept of maximum permissible contribution in RRSP with the help of an example. In 2021, Mario earned CAD 70,000 of income and had a pension adjustment of CAD 5400. on his 2021 T4 form. He had no PSPA, no unused RRSP contribution room, and no previous RRSP cover contribution. Let's calculate how much money Mario can contribute in his pension plans in current year, which is 2022. So Mario's maximum tax deductible contribution to an RRSP for the year 2022 tax year is calculated as under: lowest of CAD 212600, which is nothing but 18% of last year's income of CAD 70,000, and CAD 29210, which is RRSP limit for current year, which is 2022. So thus this is the lower of these two items, which is CAD 12600. From this lower of these two amounts, which is CAD 12600, we have to subtract 2021 PA, last year PA, and current year PSPA. Thus it is equal to 12600 minus 5400, which is last year PA, 2021 PA pension adjustment given in the question, and current year PSPA is nil. It is also given in the question. Had no PSPA, no unused RRSP contribution room, and no previous RRSP over contribution. So all are nil. That is why current year PSPA is 0. So since there is nil RRSP contribution room to be added, thus Mario can contribute up to CAD 7200 for the year 2022 taxation year. That means Mario can contribute up to 7,200 CAD in current year into his RRSP account. Let us talk about earned income eligible for RRSP contributions. Earned income for the purpose of RRSP contribution may be simply defined as sum total of the following amounts: total employment income less any union or professional fees or dues, net rental income and net income from self-employment, royalties from a published work or invention and research grants, some alimony or maintenance payment ordered by a court, disability payments from the Canada Pension Plan or Quebec Pension Plan, and lastly supplementary employment insurance benefits like top-up payments made by the employer to an employee who is on paternal leave. After understanding method of calculating contribution eligibilities for RRSP, it is also important to understand what are the implications of over contribution by investor in RRSP. Any excess amount contribution in RRSP over the amount permitted by legislation is subject to 1% penalty. However, over contributions of up to CAD $2,000 may be made without any penalty. Thus 1% penalty amount is calculated on over contribution amount exceeding CAD 2000. There are also certain ways of contributing in kind in RRSP. A contribution in kind is made when a plan holder contributes securities they already own to an RRSP. According to CRA, a contribution of this kind is considered to be a deemed disposition at the time of contribution is made. Consequently, capital gain, if any, must be included in income tax for the year of contribution. However, capital loss, if any, cannot be used in this situation and is deemed to be nil for tax purpose. Disposition of proceeds at fair market value of the securities is considered to be the contribution amount at the RRSP. Let us understand this concept with the help of an example. 2 years ago, Shen bought 100 shares of Grow Stock Inc., say at a price of 10 CAD per share, for a total value of 1000 CAD. The shares eventually increased in value to $20 per share. Shen has now decided to contribute the shares to his self-directed RRSP. The fair market value of the shares is now $20 per share. Thus, the contribution to the RRSP, which now holds the shares, is the fair market value of the shares, that is nothing but $2,000. However, he bought the shares at the price of $1,000. So the shares had an accrued capital gain of $1,000, which is nothing but current fair market value of $2,000 minus original acquisition cost of $1,000. The difference between two is $1,000 and it is accrued capital gain. Now, as per guidelines, Shen must now report this capital gain, accrued capital gain of $1,000 in his taxes for the year of contribution of the shares into RRSP, even though the shares are still being owned by the Shen. And now these shares have been deposited to RRSP with a deposition value of $2,000. Now let us understand about guidelines applicable for withdrawal from RRSP. Withdrawal from RRSP are subject to graduated withholding tax. Withholding tax refers to an amount of income tax that the financial institute must deduct as per law from the payment to be made to the owner, that is the holder of RRSP. Withholding tax rates depend on the amount withdrawn from RRSP. So if amount withdrawn from RRSP is up to $5,000, then applicable tax will be 10% in all provinces except Quebec. However, in case of Quebec, combined tax will be 20%. In case withdrawal amount is more than $5,000 and up to $15,000, in that cases, for all provinces except Quebec, the federal tax amount will be 20%. However, for Quebec, the combined tax will be 25%. So in addition to this federal tax, there will be provincial tax. There could be provincial tax of each province. And if withdrawal amount is exceeding $15,000, then federal tax will be 30% plus applicable provincial tax of the province in which you live in. And for Quebec, cumulative or combined tax for Quebec for withdrawing more than $15,000 from RRSP would be 30%. Holders must include in their income tax the amount withdrawn in the year of withdrawal. More tax may be payable at the year end depending on income level of the taxpayer. Please note that funds cannot be withdrawn from an RRSP which is used as collateral for a loan. And the RRSP plan holder may borrow the RRSP plan through Home Buyer Plan HBP and Lifelong Learning Plan LLP. Maximum of $35,000 can be withdrawn over a period of 4 years. The amounts so withdrawn remain interest free and must be repaid to RRSP within 10 years period, that is minimum 10% of the amount so withdrawn must be redeposited to RRSP. Spousal RRSP is another very important tax planning tool which is being offered by RRSP. A taxpayer may contribute to an RRSP registered in the name of his spouse or common law spouse and also claim deduction on the amount so contributed. The taxpayer can contribute to the spouse RRSP only to the extent that contribution room is available in his own RRSP limit. The amount contributed by me into my spouse RRSP doesn't affect overall RRSP limit of my spouse. The amount so contributed by me shall be deducted from my own RRSP limit. There are also certain specific guidelines for withdrawing money from spousal RRSP. Withdrawal from a spousal RRSP can be considered taxable income to the spouse or to the contributor depending on when the withdrawal is being made. If amount is withdrawn in 2022, say in current year, then amount contributed in current year and previous 2 years, that is 2020, 2021 and 2022, if any, shall be treated taxable in the hands of contributor. However, remaining contribution to spousal RRSP along with 100% interest income on entire contribution shall be taxable in the hands of spouse. So in case your spouse has less income, it is always recommended you please deposit your money, deposit your RRSP contribution in the name of spouse so that at the time of withdrawal, your spouse would be into lower tax bracket and there would be less tax liabilities on your spouse. Let us understand this concept of withdrawal from spousal RRSP with the help of an example. Say in each of 6 consecutive years, Sam contributes $1,000 to his wife Elena's spousal RRSP, which he claims as tax deductions. In 7th year, let's say he makes no contribution, and let us assume Elena deregisters the spousal RRSP in current year, which is 7th year, say 2022, and total value of the RRSP, spousal RRSP in current year or 7th year is $6,800. Thus, in current taxation year, Sam need to report $2,000 as taxable income withdrawn from the spousal RRSP. It is calculated by adding zero contribution for current year, $1,000 contribution for 6th year, and $1,000 contribution for 5th year. Put together, $2,000 will go into income tax statement of Sam. However, Alina need to report $4,800 of income from RRSP as taxable income withdrawn from the same source. It is nothing but $4,000 contributed in first 4 years plus $800 income earned till date. So there are also certain other types of RRSP contributions which an investor should understand. Some pension income can be transferred directly to RRSPs without affecting the overall regular tax deductible contribution limits. Lump sum transfers from retirement pension plans, RPPs, and RRSPs, if transferred directly to the holder's RRSP, are not included in income and no deduction arise. Also, allowances upon retirement for each year of service commonly known as retiring allowances, are transferable under very specific guidelines. There are also certain circumstances with respect to termination of RRSP. An RRSP holder may make withdrawal from the plan or deregister the RRSP plan at any time. However, deregistration is mandatory during the calendar year when the plan holder reaches 71 years of age. The amount so withdrawn can be invested or utilized by the RRSP holder with one or more of the following options: pay tax on full amount, so withdrawn in the year of receipt, and use it whatever way he want to use. Second option could be he can purchase a fixed term annuity which provides benefit to a specified age, or life annuity. And third option could be transfer the withdrawal amount to RRIF, registered retirement income funds, which provide an annual income. Other than termination of RRSP, there could be a scenario where RRSP plan holder dies before it gets deregistered. So there could be two possibilities. The beneficiary, if exists, can transfer the RRSP proceeds into his own RRSP without payment of any tax. The beneficiary can be spouse or common in-law partner. Under certain conditions, the beneficiary can be financially dependent child or grandchild also. If there is no beneficiary stipulated, or of beneficiary doesn't transfer the proceeds into his or her RRSP, the proceeds are taxed as the deceased person's income in the year of his or her death. So let us understand what are the advantages of RRSP. The tax deductible contribution can reduce taxable income during high earning years. Second advantage is that certain types of lump sum income can be transferred to RRSP without putting tax or consuming RRSP limits. Third advantage is savings for future retirement can earn compound interest on a tax-free basis until they are withdrawn. Fourth advantage of RRSP is income taxes can be deferred to later years when the holder is likely to be in lower tax bracket. And fifth advantage is that spouses can split their retirement income for the following two purposes: lower taxation of the combined income, and second purpose could be the opportunity to claim 2000 CAD pension tax credit. There are also certain disadvantages of RRSP. The plan holder pays income tax but not capital gain tax on the entire amount of a withdrawal, not just on the earnings from the amount invested. Second disadvantage is that the plan holder cannot take advantage of dividend tax credit on eligible shares that are part of RRSP. Third disadvantage, in case plan holder dies, all payment out of the RRSP to the plan holder estates are subject to tax as income of the deceased, unless the plan holder have appointed a beneficiary and the RRSP proceeds are being transferred to the beneficiary's RRSP account. And last disadvantage of RRSP is that the assets of RRSP cannot be used for collateral for a loan. So that is all for today's session. Thank you very much for watching. If you really like the content of today's video, Please do like and share this video and subscribe to the channel, and also click on bell icon so that you will be notified about upcoming videos on other financial instruments. Thank you.